Some people are wondering whether this is somewhat of an uncomfortable rationale that you're seeing strength in the economy, and yet the Fed is moving away from any forward guidance of further rate hikes. Do you think that this is a mistake, that there wasn't a greater indication to markets that the Fed did plan to raise rates again once in this particular year, considering that Rich Clarida earlier on this show said that he, if he were still on the Fed, would vote to raise rates again this fall?
Last guidance was that they would raise rates in the summary of economic projections. Chair Powell was pretty confusing. He wanted to assert very strongly that every decision is, every meeting is live, that every meeting is made based on the data. But in fact, there seemed to be guiding us to a slower pace of policy firming, 12.5 basis points a meeting on average. That sounds like a committee that is, number one, divided, and number two, pretty close to the end.
Do you get the sense as you look through this data that there is strength in the economy, that perhaps they're not really watching closely enough, that there does seem to be something that could reignite inflation later in the year?
So I think they're watching closely the data. They see the strength in the economy, and if you're Chair Powell, you're encouraged by it. He's never really had a hard landing in his outlook. I think that the extent that the strong data is coming from the labor market, it's got to be troubling. It's got to be reason why you have to lean toward more policy firming. And I think it does pose a fundamental challenge.